Good morning. Today we are going to discuss about the topic commercial banks and its functions from the lesson Money and Banking in our macroeconomics textbook. Beginning itself, we can see what is bank. Bank is a financial institution which receives funds from the public and gives loans and advances to those who need them. In other ways, a bank is a lawful organization that accepts deposit which can be withdrawn on demand. Banks are institutions that help the public in the management of their finances. Public deposit their savings in banks with the assurance to withdraw money from the deposits whenever required. Banks accept deposits from the general public and from the business community as well and give two assurance to the depositors. These two assurances are safety of deposit and withdrawal of deposit whenever they are in need. While we are discussing about the bank, there are different types of banks. One is the central bank, which is considered as the apex level bank, and other one is commercial banks. Here we can see what is commercial bank. A commercial bank is a kind of financial institution which carries all the operations related to deposit and withdrawal of money for the general public, providing loans for investment, etc. These banks are profit-making institutions and do business only to make a profit. The two primary characteristics of a commercial bank are lending and borrowing. The bank receives the deposits and gives money to various projects to earn interest. That means that is the profit of our bank. The rate of interest that a bank offers to the depositors are known as borrowing rate, while the rate at which banks lends the money is called lending rate. This is one important essay from this lesson, the functions of commercial bank. While we are discussing about the functions of commercial bank, the functions of commercial banks are classified into two main divisions as primary functions and secondary functions. These are the primary functions of commercial bank. Accepts deposit, provides loan and advances, and credit cash. What is the function of accepts deposit? This is the primary function of bank. The bank takes deposits in the form of saving, current and fixed deposits. The surplus balances collected from the firm and individuals are lent to the temporary required of commercial transaction. Second is provides loan and advances. This is also another primary function of bank. This is to offer loans and advances to the entrepreneurs and business people to collect interest. For every bank, it is the primary source of making profit. In this process, a bank retains a small number of deposits as a reserve and offers the remaining amount to the borrowers in demand loans, overdraft, cash credit and short-term loans, etc. Next is cash credit. When a customer is provided with a credit or loan, they are not provided with liquid cash. First, a bank account is opened for the customer and then the money is transferred to the account. This process allows a bank to create money. These are the secondary functions of bank. Discounting bills of exchange, overdraft facility, purchasing and selling of securities, locker facilities, paying and gather the credit. Discounting bills of exchange. It is the written agreement acknowledging the amount of money to be paid against the goods purchased at a given point of time in future. The amount can also be cleared before the quoted time through a discounting method of a commercial bank. Overdraft facility. It is an advance given to a customer by keeping the current account to overdraw up to the given limit. Purchasing and selling of the securities. The bank offers you with the facility of selling and buying of various kinds of securities. Locker facilities. Bank provides locker facility to the customers to keep their valuable belongings or documents safely. Banks charge a minimum of an annual fee for this service also. Paying and gather the credit. It uses different instruments like a promissory note, checks and bills of exchange for credit purpose. Types of commercial bank. There are many types of commercial banks. The main categories are coming private bank, public bank and foreign bank. Private bank means it is one type of commercial banks where private individuals and business own a majority of the share capital. All private banks are recorded as companies with limited liability. For example, Bank of Baroda, State Bank of India, Dena Bank, Corporation Bank, Punjab National Bank, etc. Then public bank. It is those type of bank that is nationalized and the government holds a significant stake, such as Housing Development Finance Corporation HDFC, Industrial Credit and Investment Corporation of India ICICI, and Vaishya Bank, etc. Foreign bank. These banks are established in foreign countries and have branches in other countries. For instance, American Express Bank, Hong Kong and Shanghai Banking Corporation HSBC, Standard and Chartered Bank, Citibank, etc. One most important function of commercial bank is credit creation function. The process of credit creation is said to be one of the most important of the functions are performed by a commercial bank. The central bank of a country is responsible for ensuring money supply in the economy by currency circulation. It also ensures that for fulfilling all the transactions, there should be appropriate currency in the system. This process cannot be implemented by the central bank alone. For this, they require the help of commercial banks and their reserves. The commercial banks perform the function of credit creation in an economy. Therefore, the money that is created by the commercial banks is known as credit money. This is achieved by the commercial banks in the form of purchasing of securities and providing loans. Commercial banks facilitate the loans by utilizing the deposits that are obtained from the public. There are restrictions on the amount of money that can be provided as credit from the total deposits that a bank obtains from the public. As per the rule, commercial banks need to maintain a certain portion of the public deposits as reserves with the central bank, which will be used for meeting the immediate cash requirements of the depositors. Only after keeping aside the required amount of those resources, the commercial banks are permitted to lend individuals or business. This is the way the commercial banks are performing credit creation function. Imagine person A is depositing 1000 rupee in a commercial bank. As per the rules of Reserve Bank of India, they have to keep 20% as cash reserves. So rest of the 800 rupee they can give us loan. Imagine this 800 rupee loan given to person B. This B, imagine like that the person B deposit this 800 again in the same bank. Now the deposit in the bank is 800. As per the rule, 20% cash reserves they are keeping 160. Rest of the 640 they are giving as the loan. Now this is 640 rupee taken by person C and he is again depositing this amount in bank as their deposit. By keeping 20% of cash reserves by the bank and the rest of the amount 512 again we are giving to the as loan to other person. So this person D is bringing that 512 to the bank again. They are keeping 20% of that amount 102 rupees in bank and rest of the 410 they are giving again as the credit. With this small amount of 1000 rupees, this commercial bank can give the total credit as 4000 and cash reserves they can keep as 10,000 rupee. So that 4000 plus 1000 is equal to 5000 and the same deposit is there in the bank as the 5000 deposit. With the initial investment or the initial deposit of 1000 rupee, the bank is able to create a primary deposit of 5000, cash reserves 1000 and loan 4000 from this deposit. This is the way the commercial banks are creating credit. These are the important revision questions from this module. What do you mean by bank? What are commercial banks? Explain primary functions of commercial banks. Fourth one, explain the secondary functions of commercial banks. Fifth one, what are the important types of commercial banks? Sixth one, explain with example credit creation function of commercial banks.